Hello everyone, welcome to a product review at Finominal. My name is Kaushik, I'm the lead engineer at Finominal. Today we are going to look at the DSP Mid-Cap Fund. It's been trading since 2006. The direct version of this fund has been trading since 2013. It has a very huge AUM of 19,000 crores and a very high expense ratio of 0.81%. Now, let's quickly dive into the benchmark analysis of this fund. I've already loaded up the ticker here, and by default, we have taken Nifty 50 as benchmark. And the suggested benchmark, rightfully so, is the Nifty Mid-Cap 150. Since it's a mid-cap fund, the proper benchmark or an appropriate benchmark to compare this fund against would be the Mid-Cap 150 benchmark. If we go down here to the summary analysis, you can see it has outperformed the Nifty 50 benchmark, but clearly it has failed to outperform the Mid-Cap 150 benchmark. I will quickly change the benchmark to Nifty Mid-Cap 150. And by comparing this to a Nifty Mid-Cap 150 fund, we can see that this fund has not outperformed its passive benchmark, right? So in the performance chart, you can see the clear outperformance. The yellow line is the benchmark, and you can see the blue line is the DSP Mid-Cap, right? And even in the excess returns, over time, it has gone brutally negative. For an active fund, this is not a good news. Let's quickly go to the return-based factor exposure analysis and see where the betas are coming from. So in the beta exposure, you can see heavy exposed. It is heavily exposed to the Nifty Mid-Cap 150. And also, if you look at the risk sources, all the risk is coming from the Nifty Mid-Cap 150 benchmark. Finally, we can go to the alpha attribution. I will quickly go to this chart, which shows the consistency of alpha over time. The blue color, the light blue, shows you the alpha here, and you can see that alpha, it has not generated significant alpha over time, and almost all the returns can be explained by the market. In this case, the market is the Nifty Mid-Cap 150. So now, from this analysis, we understood that the DSP Mid-Cap has failed to outperform its passive benchmark. So the question now is, are there any funds out there that are tracking the Nifty Mid-Cap 150 that you can look into, right? So since this is going to be a passive fund because it's going to just track the Nifty Mid-Cap 150 index, the fees is going to be lower. And we already saw the performance of this passive benchmark has outperformed the DSP Mid-Cap fund. So let's go to fee reducer for this. I've already loaded up the ticker here and see whether we can find other alternatives here. So the first suggested fund is a small cap fund, which might be counterintuitive because we are looking for a mid cap fund. But if you look at the fact exposure analysis at the bottom, you can see they both have similar fact exposures. But if you're not happy with this one, you can also see at the top there are other mid-cap, other suggested alternatives here. So here you can see the Nippon Mid-Cap 150 index. Again, it's a passive index fund. You can also see the ICICI Prudential Mid-Cap 150 benchmark. And there are also other mid-cap funds here. So it is called as Kotak Emerging Fund, but it's actually a mid-cap fund. So let me just quickly show you the passive fund, compare it against the DSP Mid-Cap Fund. So here we are taking the Nippon India Nifty Mid-Cap Fund. Again, the same story, what we saw in the Alpha Analyzer tool, the outperformance of the passive benchmark. In this case, the Nippon Mid-Cap 150 fund is outperforming the active mid-cap fund. And also, if you see the fees here, it's 1/3 of the fees. You get the outperformance with fraction of a cost, which is great news for investors. Now, this brings the video. I'm gonna show you something that probably might be aware of, but the analysis is very key to understand about the mutual fund industry as a whole, especially in India as well as uh, around the globe. So this brings us to the main part of the video, where I'm going to show you how many active funds have underperformed their respective benchmarks. Since we are looking at a mid-cap fund, let's focus on this quickly. So here, we are showing that 75% of active mid-cap slash small cap funds have underperformed their benchmark, which is not a great news because investors need to be very picky about the mutual funds, especially in the mid and small cap category, to outperform their benchmark. And it's very hard to do so. You can't go ahead and choose the highest performing one because in hindsight, it might be the highest performing one, but going forward, it might not be. So it's very hard to pick an active fund that's gonna outperform its benchmark. This story also applies to other countries. So if you take US as an example, you can see 87% of the funds have underperformed the S&P 500 benchmark. And we are looking at just all large cap funds here. If you look at Canada, same story. If you look at Europe, again, same story. If you look at any other country, the story follows everywhere. If you look at Australia, same story. We already looked at India, right? So it's a it's a very important information to digest that most active managers or active funds underperform their respective benchmark, and it's really hard to pick an active fund that can outperform their respective benchmarks. Finally, I want to compare this DSP fund to its peers, the other active mid-cap funds here. So I've already pre-selected four of them here. Let me take it to Asset Comparer to see whether the DSP fund has outperformed its peers. So here the blue color represents the DSP Mid-Cap Fund, and clearly it has not outperformed its peers as well. To be more precise, it has underperformed all its peers, the selected ones here, and the Edelweiss seems to be the champion here. One interesting thing about the fees is the Edelweiss, which has outperformed all its peers, is charging half the fees compared to its competitors. I think that concludes this video. What we have learned in this video is that the mid-cap active fund has failed to outperform its passive benchmark. It has failed to outperform even its peers, and also when you compare it against a passive benchmark fund, it is again it has failed to outperform the passive benchmark fund. And we also looked into the entire mid cap and small cap funds as a category and saw that 75% of the active funds have underperformed their benchmark. I think that's it for this video. Thanks a lot for watching. See you next time.